Shareholders of CCIV have seen a strong period. The recent Lucid UX video was long expected, and investors appear to wonder whether CCIV stock is too cheap to ignore. The electric car manufacturer is appearing more and more in the media, and the long-expected merger seems to be finalized soon. Welcome back to another video on NewVehicleMedia, your go-to channel for all updates on Lucid Motors, whether you're a supporter of the brand, an EV lover, or an investor. Feel free to subscribe so we can always update you with the latest news. Smash the like button if you enjoy this video and drop your comments down below. At the end of our videos, we feature the best comments. CCIV has shown serious strength this week as investors continue to buy back into the SPAC stock with growing anticipation for the pending merger. Shares have now created a new support above both the 50 and 200-day moving averages, and the stock should continue this trend towards the merger date. Last week, CCIV added almost 5% and closed the week just under 24%, which is the highest since April. Since then, it has done nothing but rise. In today's video, we aim to give you some key updates and go over a forecast. We aim to analyze the potential and will give you more detailed information on the influences on the stock levels. All our videos are divided into chapters that can be found as timestamps in the description, which can be used to navigate through the video at your own pace. The merger date and events. Lucid Motors posted on May 18 on Twitter that a merger date looks to be coming soon. The company tweeted that LCID coming to NASDAQ following planned merger with CCIV. They did not mention any date in the tweet, but it is great to know what the ticker will be once the merger is completed. A couple days later, the company announced their appearance on the Amelia concourse, where potential investors were able to take a closer look at their products. Lucid had sent an heir to make an appearance at this year's Amelia concourse. Now in its third decade, the Amelia Island Concours d'Elegance is among the top automotive events in the world, which has been a great move. More visibility for this upcoming EV manufacturer is a key ingredient to success. In the aftermath of Lucid User Experience UX event, in which Lucid Motors showcased integration with Amazon's Alexa, Apple CarPlay, Android Auto, Dolby Atmos, etc., the shares of Churchill Capital 4 were paradoxically dumped, with the stock registering a loss of around 5% after the conclusion of the event. According to the word on the street, some investors were miffed over the lack of an announcement regarding an expansive partnership with Apple. Main updates. In May, Lucid released their analyst presentation, a 75-page long document to keep us warm. According to David Modell, a contributor to Investor Place, the following 5 key updates can be taken from the presentation. 1. Testing and validation of the Lucid Air is progressing well and is on track for 2H 2021 start of production for customer deliveries. 2. Lucid's manufacturing facility is also ready to start production for customer deliveries in 2021 second half. 3. The production run for final quality validation is on track to begin this month. 4. 74 pre-production vehicles have been built in Lucid's AMP1 manufacturing facility in Arizona. 5. A Lucid ESS prototype is currently undergoing testing. Biggest catalysts. The recent news that Rivian is raising funding and seeking a valuation of close to $70 billion. The figure caught CCIV investors off guard, as the inflated valuation of Lucid Motors was one of the main reasons the stock crashed in February. Of course, Rivian and Lucid are going public via different IPO methods, but the initial valuation for Rivian is higher than established EV brands like NIO and Ford. Bullish Lucid investors have been active on social media, pumping Lucid's current valuation as a bargain compared to what Rivian may fetch. Maybe not the biggest, but surely another huge influential update. Tesla CEO Elon Musk recently announced the cancellation of its upcoming Plaid Plus model. Not the best news for Tesla shareholders. Most hypergrowth competitors of Tesla are surging on this news. In the case of Lucid Motors and Churchill, this company is taking advantage of a cocktail of catalysts to surge approximately 10% on heavy volume. Lucid's appeal is ultimately to investors betting this company can gain market share in the luxury EV space. With Tesla owning such a substantial foothold in this market, this news is positive for investors in CCIV stock. The class action lawsuit. You may have stumbled upon lawsuits when browsing the web. Class actions lawsuits have been filed against CCIV. The latest lawsuit, filed by the firm Labaton Sucaro, joins at least 5 others in making similar allegations. However, these class action lawsuits are different for pinpointing identifiable instances where Churchill Capital IV's disclosures regarding Lucid Motors' ability to deliver fell short. These include: 1. Lucid Motors was not prepared to deliver vehicles by spring of 2021. 2. Lucid Motors was projecting a production of 557 vehicles in 2021 instead of the 6,000 vehicles touted in the run-up to the merger with Churchill. 3. As a result of the foregoing, defendants' positive statements about the company's business, operations, and prospects were materially misleading and/or lacked a reasonable basis. Almost all of these complaints cite the fact that Mr. Peter Rawlinson, the CEO of Lucid Motors, asserted in media interviews that the company would begin deliveries of the Air EV in the spring of 2021. Shortly after such pronouncements, Bloomberg claimed that the deliveries of the Air EV would, in fact, experience delays. This report was ultimately vindicated as Lucid Motors claimed in its merger DA that it would only initiate deliveries in the second half of 2021. These lawsuits seem not to threaten the viability of the merger between Lucid Motors and Churchill Capital IV. Joe Biden's infrastructure spending plan. Lucid Motors and other EV manufacturers have great advantages from a concerted policy push toward electrification. The U.S. Senate Finance Committee advanced legislation in May to boost EV tax credits to $12,500 from the current $7,500 level for electric vehicles that are assembled by union workers in the United States. In order to qualify, the EV must retail for less than $80,000. In the event of a lack of unionization, the credit would only amount to $10,000. Moreover, the bill also includes a 30% tax credit for manufacturers to retool or build new facilities to produce advanced energy technologies. The aptly named Clean Energy for America bill plans to phase out this tax credit after 3 years once EVs constitute 50% of the passenger vehicle sales. The wrap-up. EV stocks in general have experienced a sell-off, but a rebound seems to be on its way. Lucid is strongly known for its technology and continues to surprise us with their media presence. They are spending more time and energy keeping their investors updated and excited for the company. Despite what you may hear about some SPACs being too speculative to invest in, this is a real company, and we believe that the company will be able to meet its target output. CCIV has seen its stock taper off the past couple of days, but there are indications that we could see it blast off ahead of its merger with Lucid Motors. CCIV investors can find more confidence in the fact that the stock was recently able to break through previous resistance points and is now trading comfortably above both its 50-day and 200-day moving averages. CCIV is benefiting from the upbeat market mood and especially the drive forward of electric vehicle stocks. Zahani Beck believes CCIV will launch off just like AMC did. What are your thoughts on the current trend? Will it continue to grow? Let us know your thoughts in the comments. Thanks for watching, and I hope to see you in the next one.